What the hell's going on, guys? So today I'm going to give you guys a portfolio overview. It's been about a year since I did that. I think it was in March of 2017. I'll put that in the upper right hand corner. I've made quite a bit of progress since then. I have a 2-year view of what my account value kind of looked like back then. Um, Basically, I was coming in at about 40% lower in terms of total value compared to where I'm at now. So this is a group of my Fidelity accounts, and then I also have a Computer Shares account and an American Express savings account, which has some money in there as well. But I figured I would bring this up so that way we can kind of get an idea as to what I've been doing over the past few years in terms of my dividend growth portfolio. So wanted to bring this up as well. I think this is actually really cool. So Fidelity has been updating this over the past couple months, and I think it continues to get better and better. But you can observe, what your beginning balance was when you first started. So I guess when it actually started noticing what I actually was doing, it doesn't go back. I guess maybe because they weren't keeping good enough records or something like that. But you can see the market change, the dividends that I received in that particular month, the deposits I had in that particular month, and you can see I had relatively sporadic deposits throughout time. So some months where I only put in $30, and then some months where I put in $60 or whatever. You can see closer in time now that it gets more routine that I have a lot higher of deposits, and then my dividend actual income has actually increased as well. Obviously, I was only making like $13 or so. Here's a $75, but very sporadic. And now I'm getting to the point where I'm getting several hundreds of dollars in a month, which is relatively good. So I guess in terms of actually looking at my portfolio and what's actually in here, I just updated it, so everything's relatively up to date. But I guess a lot of what I have, I guess a good idea to probably go off of first is look at my sector allocations that I have in terms of my income and my weight and percentage of my total portfolio. You see that energy is obviously the biggest in terms of income and value that I have. 2.8% of my income comes from my cash. This isn't including my 401k, by the way, which is around $90,000, but this is the other 150 or so $1,000 of the portfolio. Have about 7.5% cash of that 150,000, and a lot of real estate, followed by information technology. I think this is mostly First Solar. My investment in First Solar, consumer staples, which I believe is like Altria Group, Philip Morris, and then I also have a decent amount in telecommunications, which is like Verizon and AT&T. So that's kind of cool. And then I have it actually by individual stock, but unfortunately I have duplicates in different accounts. So I have like Philip Morris in my Computer Shares account, and I also have Philip Morris in my Roth IRA. So it's not perfect by any means. But this is my total breakdown in terms of like what value is in each. So about 71,000 in my individual brokerage account, 30 some thousand in my Roth IRA, and then this is around 90,000 or so. But actually going into my actual portfolio, my individual brokerage account is where I get the majority, over half of my income at the moment, because I have no idea what the heck my 401k gives me in terms of income, because it doesn't give me a breakdown by month or anything like that. All I can do is track my accounts where I basically invest for myself. So like my individual brokerage account, my IRA, my YouTube money account, which you guys may have seen a little bit about. Maybe I'll talk about in a minute. So I'm getting about half of my income, so $3,100, almost $3,200 in income from my individual brokerage account. And the total value of it's around $72,000. I'll sneak over to here, one tab, so you can maybe see some more of what's going on. But majority of my shares in my individual brokerage account are energy stocks, so BP, Royal Dutch Shell, Lilith Energy, Seadrill Limited Partnership, and Phillips 66. So it's a lot of value in terms of the amount of money that I'm making and value that I have in those. I also have Chesapeake, which is probably my worst investment. I bought that at about $12.50, $12.25 here, and currently it's hovering around the $3 mark. So hopefully in the near future, I was thinking, I'm like, well, it's $295, so I'm like, well, I could either hold on to it and hope for a moonshot, or, sell it and invest $300 elsewhere. I'm kind of just like, well, the cost versus reward at this point is, I've already lost the $900, so I might as well just hold on to it and see if it moonshots, which they've been doing pretty well about turning around the company and lowering their debt basis. But anyway, it's a different story for a different day. Hershey I've held on to for a long time. I started investing in that back in 2014. I think this is an original investment, so I've almost gotten two shares worth of dividend reinvestment, not investing any additional capital into that. Same thing with my Alcon Enterprise. I think that was back in 2014. Kinder Morgan, man. Ugh. So I invested in Kinder Morgan back when it was Kinder Morgan Partners, KMP, and made some good cash. Once I initially switched to KMI, and then everyone kind of started looking at it instead of like an MLP, more like a C corp, and then they kind of like reset their cost basis. So I'm down pretty heavy on that. I think it's like 48% over here. So yeah. But yield on cost is about $2.06, so it is what it is. Realty Income Corp, this is a pretty big chunk. This is about like $8,000 worth in my portfolio. I think my eventual goal is to get this up to around 300 shares, currently about 150. 300 shares meaning, I get additional share every month, because at the moment I get about 2 shares every quarter, so about 0.66 shares every month, so which is still really good in terms of dividend reinvestment. Main Street Capital, that's a good time. I've invested about 75 shares. I've already made about 10 of those. That's pretty awesome. Phillips 66, I've done a really good job in terms of income from that. I think I was buying in like the low 70s, so really lucky. It was like cycling in between 75 and 90 for a while, like for a year and a half, and I was just like, wow, it dipped into the 70s, let me get in. And I did, and immediately broke the channel and went up all to the hundreds. So, and it's been cycling between the 90s and hundreds ever since. So, Royal Dutch Shell, I was keeping track of it when it dipped down to the 30s. I don't think I had money to invest back then, and I think that was like mid 2015 or so. But when it ran back up, and then when it dipped back down to the low 50s, I bought. And so that's been a pretty good investment, up about 35% or so. Really good dividend reinvestment as well. My yield on cost is about 7%. I get about a share and a half every quarter, which is pretty good. Seadrill Partners, this is kind of my moonshot. I'm only down about 25% on this, but I have like 500 some shares. So I think it was distributing close to like, I don't know, it was like, I want to say 50 cents per share before they cut the dividend and everything like that. So if that goes back up to about 50 cents per share, so everything gets better, you get about $2 a share, and I have 500 shares, $200 or $2 a share per year, and I have about 500 or so shares. That's about $2,000 a year in income. So that's kind of like a moonshot, and I'm only down 25%, which is pretty phenomenal. Square, this is another one of my good investments. I'm up about 115% on that. It's been one of the best stocks in the market over the past year or so. I bought it a little bit late. I was keeping track of it when it first came on the market, and dipped down in the $9 range, and I missed my shot, but I bought it a couple months after that, and ran up to about 47. I have a covered call on this at about $40 for January, so I may have limited my potential upside, but we'll see once we get to the January time frame. Stag Industrial been very good for me. I think I'm up about 37% on that. Union Pacific has been a long-term hold. I bought 16 shares. I'm currently at about 17 shares. My yield on cost is about 3%. AT&T bought it when it dipped down to 32, I believe, in like early January or something like that. Now it got hit pretty hard, so my return isn't very good. But very good in terms of the yield on cost and yield associated with that, about 6% at the moment. So I'm very happy with that. Constantly buying Wells Fargo when I believe it's a good price. I think if it dips down to the high 40s again, I'll be more than happy to purchase again. It's been hovering around there, but every time it dips around that, I always find something else to buy. Here's my YouTube income or YouTube money portfolio. It's about $700 or so just based off the money that I've made from YouTube. I don't make any money from YouTube at the moment because my subscriber they changed the policy, and so I need 1,000 subscribers, and at the moment I have about 750. So last year I made some money, made about $500 or so, but this year I haven't made much, just based off the fact that they changed the policy back in January, February timeframe, which is fine. I'm just having fun at this point. My individual retirement account, get about $1,100 from, which is a lot of fun. Of which my two best investments so far has been BHP. I used to have about 200 shares of BHP, and I sold half when I broke even. Kind of shooting myself in the foot because I think my cost basis for that was around $35, $32. So technically my cost basis should be closer to the 30 range, and I'd have a lot more in terms of total value. But anyway, I'm kind of shooting myself in the foot with that one. Best investment I have in the portfolio is definitely my first solar investment. Started buying in the 50s about a year and a half, 2 years ago, and consistently bought all the way down to about mid 30s. And I was afraid once it dipped down to the mid 20s, and I should have bought more, but I just didn't pull the trigger. Disney I've held for quite some time. Very low dividend, but continues to grow pretty well. So hopefully over the coming years, it's good. And they've also got a lot of material coming out this year. So in terms of movies that they're releasing, so hopefully a pretty good one. Philip Morris, I also have a lot of this in my computer shares account, but cost basis is around $92. This is equal to about $260 or so in income a year. And then I have WP Carey and CyrusOne, which are pretty good dividend players as well, both real estate. CyrusOne is a more of like a data storage real estate investment trust, and WP Carey is more of like a triple net real estate investment trust that has a little bit of exposure in Europe as well. I won't really talk about my shareholder services account, but I will talk a little bit about my computer shares account. So computer shares is basically just a little account that I have. It's about $500 or so in income. The biggest positions I have in there is definitely my Exxon, which I'm thinking about moving in my individual brokerage account, just transferring that over. My biggest failures probably are IBM in here. Started buying that in the 150 range and hasn't really done anything. Another big success is my Clorox, my waste management, my Aqua America, which I was buying like $50 or so every month, and then I kind of just cut that off once it ran up a little bit. So Avi was looking really good about 2 months ago, and then they kind of took a big hit, but that's also been pretty good. So in terms of like total returns, I think that this is probably my best, about 15% total return. But yeah, still could be a little bit better. And then I have a share value package that I have through work. So it's pretty cool. Really excited about the portfolio and the changes that it's had over the past year or so. So far, I've made about, that doesn't look right. Let me just double check this. Okay, so for 2018, I'm on track to make about $5,100. So I'm hoping that I can get to around $5,600 by the end of the year. And next year, I'm looking at about $5,500. So that's really the portfolio. And I'll be sure to keep you guys posted with any quarterly updates or anything like that. So, all right, guys, thanks for stopping by the channel. I'll talk to you guys soon. Have a good one.